Picture this. You walk through Walmart, pick up random item, flip it over. Made in China. Grab another. Made in China. Phone charger. Made in China. Coffee maker. Made in China. Kids' toys. Made in China. You've seen this your whole life. Everything comes from China. Seemed like it would never change. But here's what's happening right now. Companies scrambling to find alternatives. Apple moving iPhone production. Toyota building new factories. Samsung relocating plants. All leaving China. Where are they going? India just became front runner to replace China as world's factory. Biggest manufacturing shift in generation. That's the China-India economic war. Today we're breaking down if India can actually replace China. Now let's get into it. Can India replace China as world's factory? Quick note, this info comes from multiple sources. If something's wrong, drop a comment. We make economics so simple that anyone with zero knowledge can understand. 20 years ago, China's economy grew faster than any large economy in history. Between 2000 and 2010, GDP grew 10% yearly. Unstoppable. 800 million people lifted out of extreme poverty. Today, different story. IMF expects China growth 4.8% 2025, falling to 4.2% 2026. By 2030s could drop to 3%, less than third of what it was a decade ago. What happened? 3 big problems hit China all at once. First problem, wages doubled. 2013 average factory worker earned 32,000 yuan, about $5,000 yearly. Today, 65,000 yuan, about $9,000, still cheaper than America, but expensive enough that outsourcing advantage disappeared. Factories that relied on endless cheap workers now pay more automate or leave. Plus, China's population aging fast. Working age population peaked 2015. Been shrinking since? Birth rates hit record lows. China now has 40 million fewer workers aged 15 to 59 than 2010. Labor shortage in world's most populous nation used to sound impossible. Now it's reality. Second problem, real estate collapsed. For years, property drove growth. Local governments sold land. Developers borrowed to build. Families poured savings into apartments that always rose in value. Cycle drove demand for steel, cement, furniture, appliances, everything made in China. Then, cycle broke. Evergrande defaulted on loans. Home sales collapsed. Entire projects left unfinished. Real estate once made up quarter of China's GDP. Now, dragging growth down instead of pulling up. Third problem, world changed. Globalization that elevated China now retreating. US placed restrictions on advanced semiconductors. Europe introduced tariffs on Chinese electric vehicles. Companies adopting China plus one strategy. Keep operations in China, but add backup base somewhere safer. When Washington cut Huawei off from American Chips Company, lost smartphone dominance overnight. Warning sign for every Chinese manufacturer depending on foreign components. Automation also working against China. Robots became cheaper, faster, easier. Tasks needing hundreds of workers now done by few machines running 24/7. Companies now pick places with fewer risks, not just lower wages. Conditions that guaranteed China's growth have flipped. Model that built China has run its course. Cheap labor export driven miracle doesn't have steam for double-digit growth anymore. That's what makes India's moment interesting. India can't just copy China's playbook. Game changed completely. For years, India's strength was services, accounting, software design, compliance. Built completely different workforce than China, English-speaking talent, problem-solving at scale. Private sector used to building around constraints. Now, India trying serious manufacturing push. Center of push is PLI programs. Production linked incentive programs. Government rewards for companies that actually make and ship things from India. More you produce in electronics. Auto parts, semiconductors, more incentives you unlock. Working so far, Tamil Nadu Foxconn makes iPhones that used to come entirely from China. Samsung runs one of world's largest phone factories near Delhi. Micron investing billions building chip packaging and testing facility. Building network of suppliers, engineers, technicians. India's real advantage might be digital. past decade, country built world's most advanced digital infrastructure, Aadhaar, Universal ID, UPI Instant Payment Network, India Stack data sharing platform, made it easy for citizens and small businesses operating in formal economy. Shop owners get business loans with verification records, suppliers paid instantly. Government payments land directly in bank accounts. No middlemen, no delays. Cutting down bureaucracy that once crippled business, India doesn't need to be easiest place in world to do business, just needs to be easier than China and other developing countries. Push to accommodate business, helped by diverse strategies. China had fierce provincial competition, but strategy driven from top. India has national schemes like PLI and Make in India, but real acceleration happening at state level. State governments racing to attract investments, faster permits, better power supply, training programs. Some states focus electronics, others target autos or textiles. When states focus different industries, strong local ecosystems emerge. Messy, uneven, but very real industrial growth wave. Challenges still huge though. Manufacturing only 13% of India's GDP, far below China's peak of 27%. Power cuts, clogged roads, slow ports add costs, land and permits remain difficult. Businesses complain about unpredictable regulations. Then there's inequality. India's growth mostly benefited skilled urban workers, not rural majority. Chip plant might employ a few thousand engineers, doesn't create jobs for millions entering workforce yearly. India needs labor-intensive industries, appliances, small electronics, affordable vehicles. If it doesn't, India could end up two-speed economy, high-tech campuses for few, slow growth for everyone else. When most people aren't earning more domestic demand, stays weak. Labor stuck in low productivity jobs. Inequality rises, dragging down overall growth. If India can't mobilize workforce, becomes much harder, matching China's economic scale. Still, India has one advantage others don't. Capability. Modern factories need more than cheap labor. Need technicians running automated lines at 3A. Quality teams tracing faults in supply chain, managers passing global audits. That's where India's service background helps. Already trained millions managing data processes, clients across time zones. India's moment is now. Open door created by tariffs, geopolitics, supply chain, reshuffling won't stay open forever. Companies already diversifying, signing contracts, breaking ground on new factories. India has competition though. Vietnam exports more than doubled since 2016. Shipments to US now 30% of Vietnamese exports, making America its largest destination. Mexico benefits from geography. Mexican factories move products across US border in hours, not weeks. Mexico recently overtook China as America's largest trading partner, first time in 2 decades. But Mexico has hurdles: cartel violence, inconsistent energy policy, aging infrastructure. Indonesia, rich in natural resources, using them attracting EV and clean tech investment, but faces logistics challenges, congested ports, red tape, shortage of specialized skills. India stands out, not just offering low wages or proximity, offering scale and stability, workforce over 500 million people, democracy that though imperfect offers familiar systems, market large enough to buy what it makes. India isn't tied to US or China, can trade with both, buying cheap oil from Russia, importing chips from Taiwan, buying defense systems from France, attracting record US investment in tech and manufacturing. That flexibility rare. In fractured world, its major advantage. India not following China's playbook, not trying to be cheapest factory in world, trying to be easiest place to build scale and ship from. If approach works, India just needs making it simple for companies to operate, certify, export, and grow. From Walmart shelves to iPhone factories, manufacturing world is shifting. China built empire on cheap labor and open trade. That era ending. India betting on digital infrastructure and capable workforce. Different playbook for different world. Question is, can India scale fast enough? Or will companies spread bets across Vietnam, Mexico, Indonesia instead? Next decade will decide if one country dominates manufacturing or if future belongs to many What do you think? Will India become next China? Or is era of single manufacturing superpower over? Drop your thoughts below. Don't forget to subscribe so you don't miss any videos.